When people think about just a data platform, they don't really see the true implications of how am I using that data. So oracles are really used in the space of DeFi, especially in two types of products, because
Really interesting guest on today, DoctorBlocks from Switchboard.xyz. What would you define in your words what an oracle is?
it's basically the data layer for blockchains. You have this platform that people can all interact with each other trustlessly, but what if they want to actually run operations based off of a price? And
Blockmates Orange is sponsored by Core Network, the ultimate Bitcoin-powered EVM-compatible blockchain. Learn more about Core at blockmates.com.
Welcome back, everyone. Another episode of a Blockmates Orange. Got really interesting guest on today, DoctorBlocks from Switchboard.xyz. Welcome, sir. It's good to have you.
thank
Oracles,
you.
decentralized oracles, permissionless oracles. Yeah, we're just going to get into, why they're important and why you guys are doing what you're doing. Introduction,
Yeah.
sir. Welcome.
Yeah, thank you. I love to. No, everyone actually uses an oracle in some way, shape, or form, even if they don't know it. So I'm happy to share the knowledge on what's going on under the hood in DeFi. Yes, I'm DoctorBlocks. I'm CTO of Switchboard. Before the blockchain space, I was in academics. I got a master's in computer security before going to work on hardware security at Google for a few years. Then I led the networking team on App Engine for another 2.5. And I got pulled into the blockchain space and found my way into the most critical part of infra, which is Oracle's, the pricing engine for all of blockchain. And we're talking about that today.
Today's sponsor is Colend. They have built a really innovative platform on the core network that aims to transform the lending and borrowing landscape for all Bitcoin users. Colend allows individuals to deposit their Bitcoin, enabling them to earn passive income right away. By utilizing these deposits, users not only earn interest but can also leverage their Bitcoin as collateral for borrowing. Built on the core network, Colend serves as a decentralized foundation that enhances Bitcoin's utility by empowering holders to realize their assets' full potential, either to borrow or lend or both. Go to app.colend.xyz and start earning real yield on your Bitcoin now. Cool. Thanks for the intro. What would you define in your words what an oracle is and does?
Yeah, it's basically the data layer for blockchains. You have this platform that people can all interact with each other trustlessly, but what if they want to actually run operations based off of a price? Where is the price of Bitcoin? 85% of the volume is still on centralized exchanges. If the price moves, is any price reflection that you have on your chain really going to be reflective of the true value? No. You got to connect those pieces, and oracles are the connection point for that data.
Okay. And
Yeah.
then in terms of what Switchboard is doing right now, so when I first heard about you guys, I was like, how do you guys now compete in a space that's obviously predominantly dominated by someone like Chainlink? We all know that Chainlink's been around forever. How do you guys come into the space and say, okay, well, we want to compete with these guys? Is there room to do that kind of thing based on the stats and based on what's out there? You guys are doing really well. How did you guys actually manage to secure your stake in this market, which
Yes.
seemed to have been really competitive?
Yes. Well, I think before we get there, when people think about just a data platform, they're thinking, why is that even competitive? It's a data platform. They don't really see the true implications of, perhaps they don't see the true implications of how am I using that data? And what does that mean for me if I'm making a trade? And could that mean that I swap for uh, 10,000 USD or 100 USD? What affects that? And it's actually the oracles and the data that's backing those trades that can affect that. So oracles are really used in the space of DeFi, especially in two types of products, perpetuals and lending protocols. Basically, we'll start with the lending protocols because those don't need to query oracles as often, but they can actually hold a lot of collateral at a time of someone lending or if they get liquidated on a borrow. If somebody wants to borrow a certain amount of Bitcoin on chain, they need to front some collateral to actually borrow this, and the platform would hold whatever collateral they have. If you want to actually say, I want to borrow 10 BTC, how do you know how much collateral they need to make sure they're shoring up that borrow, that they're good? You actually have oracles to price both assets to say, hey, this is how much our DeFi platform, the lending protocol, would feel comfortable with this person borrowing this much Bitcoin. So we can price those two things. But what if while you're borrowing BTC, the price falls so much, or the price of USD falls so much because let's just say it's not another stable, that your collateral is basically worthless to what you're borrowing. They would want to liquidate your position sooner than later so you don't incur bad debt to the platform. So that's what the pricing engine does. It says when those prices go high, when they go low, are you going to keep your money or are you going to actually save it? And how do you make sure that not one party is just going to say, oh, I'm going to take your money back now? Because that's the whole point of DeFi. You want to make sure that not one person has control of your funds. Because really, then we're just back in 1980s financial world. What's the difference?
Yeah.
Yeah.
So how do you guys, in terms of the tech that you guys are using, and I know that I said that I didn't want to get too technical in our
Mm,
conversation, but I suppose it's impossible in terms of what you do and your background. So I'm going to go there. So tell me
let's
about
do it.
what you guys are doing that is obviously offering from a BD perspective. If you walk in the room and you're trying to convince me as a Dex or whatever the case is to use your product, what is kind of like the main selling point that you would actually offer from that perspective?
Well, okay. When you're actually looking at the Oracle space, there's two main types. There is something called a push model and then another called a pull model. You might think, oh, this is pretty basic. It's push versus pull. I get my text messages push versus pull. I know that stuff.
Yes.
Well, it's kind of the same concept. But when you're dealing with a platform that it costs a lot to maybe update prices, it matters a lot from the user's perspective. So you all know Chainlink. That's been around since 2016, maybe. That's been around for maybe 9 years at this point. It's been around. Um, they actually incur the push model. Whenever they want to push a price, they see every 30 minutes or so if the price has gone outside the bounds of 0.1% or half a percent of what Ethereum was the last 30 minutes. And if it was, they push a new price then. That's great for high level. But when you're really thinking about lending, or let's take another instance. Let's say you want to trade perpetuals. You ever traded a perpetual? You can
Yep.
do very leveraged, and the most minute price changes can mean whether you're liquidated or not. In that world, when you're talking about really high frequency trades, you have to be so fine grained that you can't be pushing prices all the time like that. So really, the path we went down is something called on demand. Whenever somebody wants a new price update, they can request it from the Switchboard network, and then we give a set of signatures proving that we okayed this price. And then the user can bring it on chain right when they want to use it. So in that
Okay.
way, you never even have to wait for prices.
Interesting. So,
Yeah.
I mean, obviously, like what I really enjoyed about kind of like the breakdown and the way that you guys presented is that you are a permissionless, decentralized Oracle network designed to connect blockchain-based data, decentralized applications with real-world data. I mean, obviously, those are from a DeFi perspective, those are all the right. That's all the right terminology that's being used here. It ticks all the boxes and pushes all the right buttons. But what does that actually mean in terms of? We'll start at the top, like from a permissionless perspective, and obviously from a decentralized perspective, because the two can't be mutually exclusive. How are you guys doing it from a technical perspective in terms of obviously running it? Are you is there and it's multi-chain as well and the rest of it? I mean, from an infrastructure perspective, how have you guys managed to achieve the secret sauce?
Yeah. So you're actually hitting on the perfect point because now you're actually bringing in what the trust model is. Why are we different in the way we guarantee prices, is what you're asking here, essentially.
Yeah, exactly.
Um, Perfect example of what happened yesterday with Hyperliquid. And if you don't mind if we jump to that here too, I know we're getting into
Let's
something.
jump. Let's go.
Yeah. So yesterday there was some interesting news that Hyperliquid had this asset, Jelly Jelly, a meme coin, pretty low FDV, I think 15 mil. They opened up a $3 million position, I think it was, and intentionally drew down the price to get liquidated. This was actually an attack attempt on Hyperliquid. So when they got liquidated, Hyperliquid inherited the bad debt to basically auction off. But right away, that attacker inflated the price incredibly high, trying to incur so much bad debt to Hyperliquid that they would wipe out their treasury. That would make such a socialized loss for the treasury that they would just be gone. Um, Hyperliquid actually saw this was happening, and they said, "We are not going to not let this happen." They altered the price of Jelly Jelly on their platform so they could close the position of this person with bad debt. So they did not wipe out their entire treasury. And that begs the question, was that good for the platform? And why did they have so much power? And then when you actually think, why did they have so much power? Like, oh, maybe some of these platforms really aren't going into these trustless Oracle systems. Maybe we are back in the 1980s when one person has all the power. That's to show you, like, if you're just trying to move fast and you see people don't care, people throw their money around, what is all the, it's just wait till it's until the big attack that people start thinking about it again. So
So
when you look at, yeah, sorry, go ahead.
yeah. So I mean, I think for me, it's like, is there an excuse to that? Like, was there an excuse for them to do that? And I think it's quite easy to say, well, there is no excuse, because at the end of the day, you've got to have a self-regulating system, and this is just one of those ways that the system is self-regulating. But what does the other side of the coin look like? Is there an argument that says, well, we're protecting users, we're protecting our treasury, we can't allow this kind of thing to happen because it was a blatant attack? Is there a compromise around that? I think that's the question. Is there a compromise, or is it kind of like you can't have one with the other and you've got to just decide what it's going to be?
Yeah, there's the whole argument about being code is law. If you look at a case like Mango, was Avi Eisenberg just playing by the rules?
Yeah.
It's in a certain way when there's malicious behavior here. Yes, the person actually with malintent that's going to cause loss for a number of users is definitely doing something illegal.
Yeah.
But when you're on the blockchain, you are expecting this guaranteed that you are in a decentralized platform. Does Hyperliquid need to do this by law? I think that being in L3, it's already a fairly centralized practice. I would have to actually look at their terms and conditions of what you're agreeing to. But at that point, what is the point of being in L3? Maybe just to have um, the market to the crypto world, where you have a lot of people with these accessible wallets. So you have a system that's compatible with, you know, uh, people's desktop trading apps like Phantom, like MetaMask, and just giving you access to that market. Not to say they need to be diehards for the thesis of blockchain, but it does go against the entire point, which
Mm.
is to decentralize that trust. So we're back at this world where maybe it's better to trust a single party um, because there's other bad people in the world. But if you actually are going to the blockchain in the first place, I would assume the point you're going towards is that you're not giving full control of your money to any custodian like that, which essentially does happen like that.
Yeah, so I think for me it's like, and I'd love to get your perspective on this. Is like, and to your point, is that I want to use a decentralized environment because I don't want you, who owns whatever protocol it is, basically taking ownership of my money. Like, that's the last thing that I want to see. And if you have nefarious actors, which we see a lot of in the space, because the space is inherently transparent, not because it attracts more nefarious actors. The reason why we see so much nefarious behavior is because it's more transparent than anything else. I don't want to use decentralized, or any platform for that matter, where my funds are in danger. And I think that's where I'll end up being against the process that we saw unfold yesterday, where there was essentially, well, I'm making a call now and I'm going to call it quits now, and I'm going to restrict any kind of movement around that. I see the reasoning, and I completely understand. And in many ways, I'm like, well done, guys. There is a part of me that says that, but I think you are stepping over the line, and you are essentially entering into a realm where you are essentially messing with, I believe, to be the balance of why we have decentralization. So I don't know
It,
if you agree or if you disagree, or what your perspective is around that.
I mean, in the end of the day, they were protecting themselves and their users, and I can't argue with that. So yeah,
Yeah.
I think what they did was justified, but I do think that they might have been misleading people in the first place about their security measures. So was it the right call at that time? Yeah. Mm, Probably change some of the systems and security measures and risk factors that take in the future. Yes, and be a lot more clear with the terms and the terms of engagement here. Um, yeah, good.
Yeah, yeah. So I mean, so if so, let's look at it from obviously Switchboard's perspective as a product, right? So you're in a situation now where you've been deployed as an Oracle to obviously oversee what it is that's happening on the pricing. Is there a way that this would have played out differently if you guys were the Oracle that was overseeing that?
You're asking the perfect question. The perfect question. And I want to actually start with looking at the landscape of oracles as they're supposed to function, not in the hyperliquid phase first. When you look at these other oracle protocols, I don't want to say by name because it's just it's not the best thing to do. You see who's actually running these machines to price services. Chainlink is moving off that push model to go into a pull model to push prices, whenever they can or when users request it. Same with Pith. Uh, Redstone does, I think, at a bit of a different cadence, but they do have a pull model, so users can bring on signatures themselves. Um, but who's actually deriving these prices in this world? If you actually look at the operators, it's a hell of a lot of market makers. And why do you think market makers might want to run oracles? What gives them edge? That few seconds that they see a price before a user? What can they do there? Like
Yeah.
you assume because it's decentralized that no one has an edge over you. But perhaps you can think that. But when you're actually requesting a price from an oracle, there is that entity that is going to see that you're trying to request a price right then, and they might want to take some action. What we do is we actually use this technology called trusted execution environments. I'm going to take it that you probably don't know what that is. That's a very hardware-based thing, but it's a special type of hardware that actually makes sure you can run an entire app or a VM. And even me running this on my computer right now, I would not be able to look inside of it. I could just host it, and it's all encrypted and stuff. I could code it to output some logs. I can see it. But whenever I want to output something, I can actually attach it to a proof, proving it was in this runtime and that I cannot even see it. So in that way, even the Oracle operators could not see the price before users get them, which evens the whole playing field.
So it seems like it comes back to what it is that I was saying early on. You get good actors and you get bad actors. If you're a bad actor, I would assume that they wouldn't want to use your product. If they're a good actor and they actually want to stick to the rules, which I would hope is generally the case, then your product is kind of like an obvious choice.
I
In
would say there's
terms
actually a twofold thing. Like, can I add one more thing before we move on?
go for it.
So the one case I mentioned there for bad actors is for somebody that wants to run an Oracle. And for that case, we protect them from trying to front run a transaction around the price of what
Yes.
you're trying to query. Great side to this. The other side of it is when you have these oracles trying to report prices, they're streaming it from these markets that they're running, that they have insights to first. How we do it is we actually have the users specify which sources they want. So it's
Okay.
actually transparent how the price is being derived rather than these other Oracle providers that might say, we are providing BTC, you are trusting this Oracle. For us, we're not even trusting the Oracle. They're just machines doing a job, and we are creating proofs through and through. So
So are
really,
you,
that's what I mean by trustless.
so are you so let's expand upon that. When you
Mhm.
talk about trustless, if you can go into more detail, where does the true price reside? Does it reside in one place? Does it reside in 20 different places? How does the mechanism on price is how does the price get established, like the true price, like to the 0.01 cent or whatever the case might be?
Oh, yeah. Um, I actually want to go do a story of how Alameda first made a lot of money.
Yes.
They actually had licenses to trade in, I think it was both the US and Japan for early crypto. And the price,
They owned one of the exchanges that was Liquid Exchange in Japan, wasn't it?
yeah, I
Yeah.
can't remember the name, but if you
Yeah.
know, then we're on the same page. There was about, I think, a 10 bip discrepancy between the prices on the Japan exchanges and the US exchanges, because they were just so illiquid. Nobody had these licenses that they had to trade on both of these markets, but they did. And they made a huge profit off of arbitrage in just arbing those markets.
Wow.
Huge.
That's
Just
insane.
because they had a great licensing deal. That was how they got a lot of their initial capital. But my point here is price isn't always a single number. You have to really know the separation of markets. And if you want to get a true price, sometimes you have to leave that to the users to know what price they're targeting for the liquidity that's present to their target audience or their target customers. That's why we actually allow users to configure their sources, which other oracles do not. To say, if you want to get this from Binance, Bitfinex, and OKX, you can just get it from there. Or if you want to get it strictly on chain, you can get it from there. One other example. Have you ever bought an LST like Jito Sol?
Yes, I have.
You can sell that for Sol, or you can redeem it for Sol. Which one's the true price?
Correct. I have no idea.
Exactly. So really, they're both the true price, but what's more liquid? Because that's the bigger amount you can trade.
Sol.
Yeah, the bigger amount you can
So
trade
Sol
is
would be more liquid.
probably going to
Yeah.
be more of a true price, because that's how much size you can move through. And it's all about how much size you can trade. So you have to weight that around the liquidity around these different sources to know like what the decision of a price factor is. In most cases, if they diverge more than 0.1%, you probably want to halt updating the price because something's going on. It depends how liquid it
Okay.
is. But we know that there's these discrepancies. If you have meme coins trading, like the Trump coin, that's going to happen all the time. You got to have a little bit wider band, and just know that if you're running a perpetual, you have to lower your leverage bound because you just can't handle that discrepancy. And that's why we make this all
Interesting.
configurable.
So so the starting point, for argument's sake here, is that Binance sells X coin for $1, and then OKX sells that coin for $1.01. That period between the $1.01 between the two exchanges, they've got their own mechanism running, right? And then the oracles essentially pick up those prices, and then where does the kind of comparative pricing happen in terms of aligning the prices? What does that process look like?
That would all come down.
This is
Yeah,
obviously an idiot's guide to
no
how this works.
problem. What you're talking about is the main practice of arbitrage. And there's a lot of money in arbitrage, but there's a hell of a lot of competition too. That is when
Okay.
you have these two markets that are pretty liquid, and you have a separate price on both of them. Why would I not sell on the platform that's offering me a higher price and then buy on the one that's offering a lower price
Yes,
until they're evened out?
correct.
You would just keep looping and looping, and then you're going to make a profit by equaling that price out. So me, as just a normal user, is incentivized to equal out those prices.
And how do you do that?
You run some trading bots. If you're good at coding, you're going to have a good time. You're going to make some
Yeah,
cash. So you just have to be plugged
interesting.
into code. It's great when all of the liquidity is on a single blockchain, because then you can make both of
Mm.
those trades at once without the risk of somebody swooping it in and selling it before you can sell it, because then you're stuck with basically the debt token that you just bought.
So is it fair to say that as an oracle and essentially the services of Oracle, that the counter to that would be MEVs and MEV bots?
To even out the price, yes, but you
Okay,
you would not believe how many big gaps there have been and how often they are. Uh, so
interesting.
sometimes it's not that easy to make these swaps to a single market from to another. Sometimes there's a risk that you could take a huge amount of size for one platform, and you can buy a lot of this token that you think you're going to sell at a better cost than you just bought it, but somebody else comes in. So some of these gaps just persist, and they can do that. Just like the FTI, the Alameda situation, they persisted because they had
Mm.
a special ability to trade at both markets. Sometimes there's just these gaps.
So I mean, obviously, we're talking around something that I picked up when I was doing a bit of research around what it is that you guys are doing, and that's obviously the Oracle Aggregator Network. That's kind of like you guys have coined the phrase, and maybe that's like a really good summary in terms of what it is that we've just chatted about. So kind of like in your own words, what is the Oracle aggregator network
Yes.
from a switchboard's perspective?
Yes. So a lot of people do end up using these prices that could be a black box. We don't actually know how some of these are the market makers are working behind them. But no matter what, we want to actually decentralize the price source as much as possible to give less advantage to any single person reporting a price. Because as long as you have more parties involved, it's going to be harder and harder for that single party to see any upside or edge from trades around it. So what we do actually is we've made an entire system to use all the other major oracles within Switchboard. And then you could actually say if Pith, Redstone, Chainlink, if switch anything you've derived from Switchboard is 1% off from the Binance
Yeah,
price, halt trading until action is taken from the platform. Yep.
interesting. In terms of the business model that you guys have, and this isn't something that's spoken about a lot, it's kind of like, well, oracles do this job and it's really important, and then when you drill down into it, as we have done today, it's like you actually realize how damn important it really
Mm-hmm.
is. It's not something to be taken lightly, and more importantly, when you're looking at decentralized systems, like if they truly are decentralized and permissionless and the rest of it, then it becomes even more evident that it's a super important service that you guys are providing. The simple question is, how do you guys actually make your money? I mean, where
Yep.
where do you guys extract the value?
Yep.
Yeah.
So I mentioned all these oracles are running and delivering prices on these chains. They actually have to sign off on it because we've actually registered their confidential runtime that I bought before on chain. And that was work for them. They had to set up the special machine, they had to do all this stuff. Now they have to keep it up, they have to be fast.
Yeah.
They're doing some work. So they have to be compensated. So when actually somebody goes and updates a price in the Switchboard program, they get that price verified. And when they call verify, they actually transfer a small amount of their transaction fee to the oracles that answered. So in a sense, it's pay
Okay.
per use.
Okay. And is that extrapolated from gas fees? I mean, how does
It varies
that
by
all
chain
get baked
actually,
in?
but it's meant to be a
Okay.
fraction of the entire transaction cost to be almost transparent.
And are you guys, from the client's perspective, are you speaking to foundations and ecosystems directly, or do you speak to the dApps within, or is it kind of like a collective
The dApps,
that you guys are
definitely the
doing?
dApps, because they're the ones that just care about the
Okay,
faster prices. They generally know the risk, but don't know the know-how about securing a data feed, and they want some help and they want some guidance on that. So we've
cool.
uh, been building this giant index of over 6,000 data feeds, and what we do to keep the long tail ones safe is if they have a divergence between any of the sources we detected, you have to halt it. That's just a gap risk that you have to take with a really low liquidity. Some of the stuff has $10,000 of liquidity. You have to say if all the sources don't agree, you have to know what to do. Yeah,
A question that I actually should have asked
yeah,
earlier on in our conversation, and I do
hmm
apologize, is in terms of decentralized network that you guys
hmm
have, how does that work? Are you guys piggybacking off nodes? Have you got specialized services that people come in and set up validators themselves? What does it look like from an infrastructure perspective in order to achieve
got
decentralization?
it. Yep, yep. So we do require that special machine type that allows us to do that confidential runtime, that verifiable runtime. Uh, but
Okay.
from that, for the pricing mechanism we need, the machines can cost maybe the operator like $200 a month. If they're doing a full blown set of
Okay.
requests, it's not that bad. So the time it takes to set up is just a few hours. It is not the highest incurred cost, just making sure the uptime is fine, which is pretty balanced from just making sure the code is good, frankly. And
Okay.
then it can be if they're just participating, running and forgetting, because their keys are automatically verified on chain. We know the runtime is safe. They just got to keep answering users' requests for price updates. Yep.
Interesting. Okay, great. And then in terms of the clients that you guys are servicing, I mean, is it you guys? I know that you guys have been doing work on the core network and ETH as well, and then Bitcoin as well. Just give us an overview as to where you guys are and where you're doing business. And if you have permission and you want to, please tell us who you guys have been working with. I'm just curious as to the extent of your network and who you guys are servicing.
Yes. So we're definitely most prominent on Solana, Aptos, and Sui as the SVM and move chains. We have a lot of gaining
Okay.
traction on the EVM side just because it's so fast. I would say the largest customer would be Jito itself, actually routing MEV tips through us. So people actually pay Jito
Okay.
to try to land transactions faster or in a certain order. And they again pay Jito in different types of collateral. We help actually price different types of collateral that people can pay for tips. And they use us for that.
Okay.
And it's Jito is probably the most high volume infra in all blockchain. And it's a very nice partner to have. Another one,
Absolutely. Yeah.
yeah. Some of the other ones that we use, definitely the higher users are the perpetuals. Not to say lending's any less important, but perpetuals make a lot of requests. So GMX on Solana
Yes.
and Drift would be the larger perpetuals that use us. Uh,
Oh,
Other than that, we go more into lending, which will go into Aries markets, Echelon, Save Finance, MarginFi, to name just a few there. Yeah.
nice. Okay. So you guys have got a good portfolio. Just for those of you who are listening, Switchboard, I think, was launched in 2021. So fairly new kids on the block, considering the competition like Chainlink have been around for a long time. It's always, I think it's great that there is that level of competition and new blood coming in. And it's great to hear that you guys have got what sounds like really good traction. I bet it's been tough trying to get into other markets, but I'm sure with this philosophy, you guys will make great progress. Yeah, thanks for making the effort, sir, to come in and educate us. I definitely learned a ton about
I'm
oracles.
glad.
Kind of thought it, yeah, kind of thought it was pretty straightforward, but obviously not. Yeah, thanks for taking the time. I'm glad I managed to get you on. I think it's a obviously important and interesting topic, and yeah, good luck. I hope you guys go out there and get more business and give Chainlink a run for their money. They need it. And yeah, thanks
I
for your time,
appreciate it. It
dude.
was
I
fun. We'll
appreciate
do
it.
some more.
Cool, man.
Wonderful.
Take it easy, sir.
Thank you. Thank you.
Cool. Thanks, guys. Yeah, thanks, guys, for joining us. Please like and subscribe. We appreciate it. And yeah, share the content and yeah, let us know what else you guys would like to see on a Blockmates Orange. Take it easy. All the best.
Quick one, nothing here is financial advice. It's for entertainment and educational purposes only. Always do your own research or speak to a financial advisor before making any investment decisions. Like and subscribe.